This is Andrea Latuski, Director of Education at the American Fraternal Alliance. In this podcast, Alliance President and CEO Joe Annotti sat down with Andrew Edelsberg, Managing Director at Kroll Bond Rating Agency, to learn more about his company and how they are working with the fraternal industry.
Kroll has kind of come out of nowhere, really burst onto the scene in the last couple of years, at least in the life insurance sector, and particularly in the fraternal subsection of the life insurance sector. I mean, you were an unknown a couple of years ago till I saw you at a couple of industry meetings and we started talking. And so, is there a why for that? Was there a need that was going unfilled that you guys are filling? How do you explain the sudden emergence of Kroll?
Absolutely. I think it goes back to Kroll's creation, where really Jules Kroll, who is a pioneer in the corporate investigations industry, he basically started the firm in 2010. And it was really in his corporate DNA to go beyond the information provided to him when he was doing his investigations, in that when he started KBRA, he said, we're going to do something different. My experience being at credit rating agencies almost for 2 decades, I've seen how some of the big ones are, the specialty rating agencies are there, and at this point there's some disruption going on. And it's because some of the agencies are changing their methodology and or changing their emphasis on a particular sector within insurance. So KBRA said, you know what, this is an opportunity for us, and let's get the analysts that know the business, and let's see if we can do the same thing we've done, basically replicate what we've done on the banking side, on the insurance side. So I've utilized my relationships, my experience in the industry. We developed a methodology, and about 16 months later, we currently have 11 insurance financial strength ratings public out there on insurance companies, 4 additional ratings on financial guarantors, but we have a lot in the pipeline, and things are going very well.
Excellent. But from a big picture perspective, why is a rating from a independent credit rating agency important to an insurer in general, but particularly a fraternal? What's the value in it? How do you see them using it?
Well, I think that the rating itself is not as important as the process. So we view KBRA is going to be a partner. Now, the fraternal or the companies that we rate are our clients. And I think, again, my experience is that when I was at the other agencies, that I don't think they treated their clients well enough and serviced their clients well enough and understood what they needed out of the rating and the rating process.
There's only a handful of fraternals that are right now rated by the one primary insurance company rating organization. The reasons that I hear from folks for not being rated are that the primary rating agency has a quote-unquote fraternal bias. Others say it's just too expensive to go through it. And others say that, for our market, for our ethnic market, for our faith-based market, people that purchase the products from us and the field representatives that sell it, it's just not necessary to have a rating. I kind of contend there's probably some accuracy in all those things, but I think they can. I don't know that they outweigh the importance of being rated or going through the process. So, given those factors for many societies choosing not to be rated, how does Kroll differ in their evaluation process and really in their overall view of fraternals?
So, with regard to our process, again, I think that when Jules started the company, he wanted to make sure that what we did was basically his beliefs really form the foundation of our organization, and that's our vision really to be answerable for the accuracy of the calls that we make, of the ratings that we do, And our mission is to set a standard of excellence and integrity by offering accurate and transparent ratings. I'm not saying the other agencies aren't accurate, but I think that the level of transparency is not there and the level of client service is not there. So, perfect example, our first rating was a fraternal, and is Catholic Order of Foresters. And when we asked them when the last time their other rating agency came to visit them, they said that it was probably 20 years ago. I don't understand how an analytical team could truly fully understand the business model of a company without visiting them, without meeting the people that do the work every day. Not just senior management, but mid-level managers and even some staffers. These are key people and key decision makers that control how the company goes, and you understand the work environment and how that company could survive for many, many years. The life insurance industry in particular is a long-term industry. So we believe that there's a need for these long-term ratings, these policyholder ratings. And the people are what's important, because they're the ones that sustain the company from year to year, from decade to decade. So you've got to meet those people. You've got to interact with those people. It's so important. So we go to visit every company. That's across KBRA. That's really important. But then when we get down to the analysis, really the analysis is not totally data-driven. It's both a quantitative and qualitative analysis. Again, that qualitative aspect you can only really get from meeting, interacting, talking with the company, understanding management and their backgrounds, the people that do the work, their backgrounds, the type of work that fraternals do, which is unlike any other sector within or segment within the insurance industry. And we'll talk about that later. But I think that that's really key to our processes, not just collecting the data. We need to get financials, historical financials, business plans and projections, but companies have that. What we don't do is we don't make companies file extra surveys, et cetera, with data that we're not going to use in our analysis. The report that we do is custom tailored for that company. And every report that we do for every company, firm-wide, is available for free on our website. And the companies get to utilize that report for any way they want to. So if they want to send it to policyholders, to agents, et cetera, that's a way for companies to market themselves. And it's informative in that it's a lot of information that's analytical. So hopefully that doesn't get lost when the end constituent's reading it. But it's definitely enough information for them to really understand the company and get at why are they in business, what's the reason for we think that they're going to be around for a long time, and what's really behind that rating. And unfortunately, the other agencies, I think, are so focused on getting all of their reports to look consistent. I'm not really sure that's the right answer, because it's difficult to have company A get a report that's a single standalone, let's say fraternal or mutual company, looking like this, and the same type of report for a global company that has multiple entities in multiple countries and multiple states and various lines of business. Those two reports shouldn't be the same. They should be different and focused on different things. We have the ability to do that, unlike the other agencies.
Any closing comments? Any things that I haven't asked you that you'd like to convey to the audience?
Well, I appreciate that. I think that from KBRA's perspective, our methodology is a little bit different from the other agencies in the sense that it's a true combination of quantitative and qualitative aspects. We don't utilize a proprietary capital model, so the ratios that we look at are similar to the ratios that most companies would look at when they're managing their company. And then we look at the NAIC RBC, obviously, but we know that there are certain limitations with that model as well. Every model has its limitations. But we won't tell a company that you can't get this rating level because your capital isn't at this level, because it's more than that. It's more than one ratio or a few ratios. It's how you run your business. And we have a favorable view about how fraternals run their business, and it's because of the way that they're structured and their mission. And I think that it's a long-term, it matches perfectly with the long-term nature of life insurance and retirement products. And I think that over time, the fraternals will be the ones that will continue to be around. They've been around since the late 1800s, and they're going to be around for further and further decades and perhaps centuries.
We think so too.
So I appreciate the time, and thanks for having me, and looking forward to working with the American Fraternal Alliance in the future.
Thank you, Andrew.